Hey, everybody, and welcome back to another episode of the Arizona Monthly Housing Market Update. I'm Katie, and this is
Matt and
Ryan. Hello, everyone.
I did it differently again, guys.
Yeah.
I just want to keep you on your toes.
Like to switch it up.
Like a ballerina.
Yes. Well, welcome, everybody. We have a lot of juicy goodness to go over today. We are going to kick it off with the rate update with Mr. Ryan. Take it away.
Yeah, it's been positive news since our last update. We've seen rates steadily improve over the last few weeks. So, we talked about inflation a lot, and, that's the key driver, obviously, for mortgage rates. And because inflation had remained elevated over the past 6 months, the Federal Reserve did decide to pause rate cuts until we could start seeing improvements again. So what changed these past few weeks is, one, we're seeing a little bit of a slowdown in the jobs market. The Bureau of Labor Statistics, BLS, they showed 142,000 jobs created in January, but 170 was expected. So it was a lot lower. And a slowdown in hiring usually means inflation is going to come down with it. And that could really motivate the Fed to start cutting rates again, which will be big. And on top of this, we did get the minutes from the Federal Reserve meeting, and it was showing that they're more optimistic on inflation because shelter costs are coming in lower. And that's a big component of overall inflation readings. So, this optimism has really helped drive rates lower. And we're even seeing government rates below 6% right now. We're locking some in at a 5.875. So that's very encouraging. So we're hoping to see this trend continue.
Nice. And how are applications looking? Obviously, that's kicking up. As you mentioned, the activity is growing.
Yes.
Are these people who are fully qualified? Like, give us a little read on what your common applicant is.
Yeah, we saw the usual seasonal dip that you typically see in December and January. And, obviously we're kind of mirroring 2022 and 2023, where things kind of pick up end of February. And then March and April, things really get busy. And we're kind of seeing that right now, where a lot of applications are coming in. So, and it's a lot of people who are actually owning homes right now that are ready to finally list and move up. I think people are just ready to get off the fence and waiting for rates to be in the 3s and 4s, knowing that they pretty much got to settle for 5s and 6s right now, and really starting to make that move to upgrade their house. So a lot of it is our past clients looking to either sell or rent their house and upgrade.
We're seeing a ton of that on our team as well. It seems like now, with the inventory levels having grown a bit over the last few months, that there's more selection out there. So I feel like maybe people are thinking, okay, I have something I can move to if I do sell my home. Are those the conversations that you're having?
Yes, yeah, the inventory picking up has been great. There's just so many more options. And I know we talked about some of them being taken off near the holidays, but relisted. And, we're just seeing more and more options, and it's just getting people to move more. So, yeah, we are seeing a lot of activity picking up because of that.
Awesome. And are you having the conversation that I feel like I've had my entire career, like for 2 decades, but are you having the conversation more frequently or less frequently with buyers about, hey, I'm gonna wait till prices come down. Just, I'll give you a buzz when that happens. Are you having those conversations at all?
That has seemed to die off a little bit. I don't know if you guys have seen the same thing, but, throughout the past couple of years, everybody was kind of waiting and seeing, feeling like rates were going to be driving down prices. And as we topped out in rates, even in the 8s and the high 7s, and we still saw, price being somewhat steady during that period, I think they just realized that, most likely as rates are coming down, we're not going to be seeing that drop that we were expecting.
Yeah, I totally agree. Guess what I have to show that? I have
Let's see
slide
that. Yeah.
Yes, let's take a quick peek at it. And what this is showing you is, for those that are maybe listening on the podcast platform, I'll do my best to verbally describe this. But what it is showing is an average sales price per square foot. So this is quite a broad range. It's covering Maricopa County and Pinal County, all price points, all property types. But it's really showing you some interesting, or I feel is pretty interesting, statistics. So if anybody, those of you who have been waiting for the crash to happen, quote unquote crash, we've been hearing about for the last couple of years, you missed it. So that happened in January of 2023, according to this chart. And this information is taken from the Cromford Report, which is a pretty prestigious publication, I would say, around here. Ryan, would you agree with that?
Oh yeah, absolutely. In terms of Arizona data, very much so.
Yeah, they're pretty darn spot on. So what we're seeing is a bit of a rise, which I think might surprise people to know this. So say January, March-ish 2023, we started to head back up the hill. And I think that people, and the reason why I say I think that people are a bit surprised about that is because we have, over the last year and a half, 2 years, witnessed a lot of price reductions. But I'm going to go out on a limb, and Matt, you interject here and say it's because those sellers were priced too high.
Yeah, I'm going to totally agree. Yeah, I definitely think there was a mix of all of that. And I think, we were coming off such a high. Of course, sellers had the ability to kind of, most of them, to be cautious and be more conservative what they want to let their home go for. First off, they'd have a very low rate. So they had no pressure from that front saying, hey, I need to get rid of this. Then most of them had a lot of equity. So they're kind of like, hey, I'm not in a position to give it up and I don't really need to. I think what we saw was a lot of people that were in, unfortunate circumstances where they didn't have that choice and, they needed to sell. Or that investor that maybe tried to pick up a VRBO and it didn't turn out to be, the way that they wanted, which we saw a lot of.
Yes.
Or a flip.
So, and that really kind of falls, what we even saw if we go back to the crash where we, the original, 2006 to 2009 real estate debacle and what really caused that and what consumers' confidence was and where their direction was. And you saw it, a lot of regular consumers kind of jumped on that investor bandwagon.
Yeah.
And that's exactly what we kind of saw in 2020, 21, 22, where a lot of people were picking up secondary residences and saying, oh, VRBO it and all this, and it just didn't turn out as sweet as they thought. And that's exactly what we're seeing. We're seeing, I think at the end of this last year, people also had that ability, sellers, that most of the people that had sellers that had properties on the market, let's say September, October, going into the election, that they had the ability to say, I'm going to take it off the market. I'm not in this position that I'm stuck and I need to sell and I'm just going to keep dropping my price. No, they're like, we'll take it off the market and we'll see what happens. And we'll go back on. And that's what we saw. We saw a lot of stuff that's just come back on since January that, in Arizona, you're going to have two different indicators that are saying your cumulative days on market on the MLS and then your agent days on market. Cumulative means like, hey, if you had another agent, you took it off the market briefly and you put it back on, it's going to kind of keep ticking. And that's what we're seeing. We're seeing a lot of homes that are being put back on and they've already have those previous agent days on market. And I think the buyers that are out there have, some of them that have been patient, they've seen these same properties come up again. So it's not like they're all excited for something that's new. And I've seen those same listings kind of do the same thing they were doing to, prior to being pulled. The new listings that are coming up that are fresh, that are priced right, that are move-in ready, those things are still, we're seeing a lot of activity on those, and we're even seeing multiple offer situations.
True. Yeah, absolutely. Little fun fact from the Cromford Report presentation that I attend each month. 2011 was the bottom, guys. So if you bought a property in 2011, groovy.
Yeah.
It went up from there.
100%. And, and I think what you're seeing right here too is very, very a good indicator for where we are at the bottom. In 2000, back in 2005 and 6 and 7, all throughout that whole explosion in the Arizona real estate market, it was really based off that lower entry level, mid-level price range. We did see a lot of luxury movement, but our luxury movement wasn't even that high when it was held at the scale of national level luxury. We still didn't teeter into those $5 and $10 million home prices that you'd see in California, New York, and all these other places. What you see right here on the graph that you're showing is you see that adjustment that came down. That was going to be a lot of the lower price per square foot homes that really had that dip. But then you see that full adjustment going up, and that's luxury. The difference is you have a driving force that is built off of people paying cash, business owners that are moving businesses here, people that are, that really understand this and have confidence to put that much money down on property in this time. And I think that's exactly what's carrying it. And it's going to kind of catapult that lower section once everyone kind of gets their grips and rates lower.
Totally agree. And I think that it's important for our audience members and followers to understand the difference from what happened back then and how people were purchasing properties back then. And Ryan, you probably have lots to say here, but there were some different loan guidelines, right? I mean, I can recall people, these weren't my clients, of course, but I can recall people picking up 10 houses on a stated income loan, and they didn't have any tenants for them. So they just kind of sat empty. Can you guys elaborate a bit on your experience with that? Because I know you both were in the market at that time as well.
Oh yeah. 2006 and 2007 was a pretty wild time in the mortgage industry. That's kind of when I first got started. And originally, they don't even show you how to read pay stubs because most of the loans out there didn't require them. As you mentioned, Katie, there were stated loans.
Right.
So literally, you could just tell the bank how much you make, and the bank would believe you. And they would give you 100% financing, even an interest-only loan. And the biggest thing back then where they did ARMs, really short ARMs, which was like fixed for 2 years, adjustable rate mortgages. And then after that, it could adjust. So the problem is, as rates went up and, people were buying homes they couldn't afford. And as prices went down, as the rates adjusted, that's why we saw so many foreclosures. That's why we saw the Great Recession of 2008. And obviously, that has gone away. Now you have to have your firstborn child to qualify for a mortgage, you have to provide everything, pay stubs, W-2. So really, that was abnormal, obviously. But what I think was really interesting about this chart is that it looks like we're really heading more into just that normal market, which we really haven't had since the pandemic, as we had rates in the twos. And we just saw that spike in demand and, very low inventory, multiple offers. And I think that cool down and that pullback that we're actually seeing in the prices were when rates finally changed and sellers that were way overpriced and like, oh, okay, we got to pull it back to kind of where normal market prices are. So yeah, I think this is an interesting chart. And I do think we're just finally getting back to that normal market that we haven't seen in so long.
Yeah. 100%. And to kind of go on that same thing, as you were saying, you didn't have clients. I had a few clients back then that did that. California guys that were coming over here and getting really creative, and we'll talk about really leveraging an already broken, what you just said as far as qualifications, buying 10 homes with 10% down. One of the interesting things wasn't, and I know I've said it before, is during that period of time, the investor was all about appreciation, had nothing to do with cash flow. And one of the reasons is Arizona's rental market was really weak at that time. Yeah. You really look at it, as far as apartment complexes, they were really just starting to get new ones built in the early 2000s. There wasn't a bunch of them. Single family home rentals weren't even really that popular. A lot of these guys that were spending $350,000 on these homes that have pools that were 3,000 square feet, they couldn't even get them rented for $1,500 a month.
Right.
So you were running negative on your cash flow, even if you had an ARM or whatever it was. So these investors were based on a very unique approach. And that's where I think a lot of people learned. It was very short-sighted. Now you look at it and you see what really drives an economy and economic strength is that in what we see in our tenant activity. And that's what we have now. We have a lot of people that are moving here constantly. People that are saying, we're not going to purchase right off the bat and we are going to rent. And you see that, and you see that in our rents. Our rents are right there and they're solid. So I think that's just one more big contributing factor to this, that I pull the stats each week and the same thing. We went up a little bit in inventory as far as single family for sale properties in Maricopa and Pinal County. It was a roughly 1.4% this last week. We went up week over week. We actually dropped again for like the fourth week in a row in our rental, and we went down 1.6. So like it shows it right there. So bottom line is they're just going to go to rent. You're going to pay more for rent. You're going to see those prices drop, and that's what says healthy.
Yeah.
So those that are looking for the bottom, those that are saying, hey, I'm going to purchase, and this, we're there.
Yeah. And then those days, I was thinking I would hear this term come up with the both of you talking, but remember the old neg am days?
Oh, God.
Oh, yeah.
Right? That was a part of it too, wasn't it?
Yes, I had one. Yeah.
So for those who don't know exactly what I just said and what I'm talking about, can you quickly just give them a little synopsis of what a neg am is?
It was negative amortization loan was ultimately, they came up with a product that would take a portion of your payment and tack it onto the principal so your payment could be more affordable. You know, you think about that. You talk about a gamble, but that just kind of piggybacks on what I was just saying. Not only the consumer, but even the institutional's confidence on this so-called appreciation that's just going to keep going up and never fall, which is just wild to think. But they were on board with that 100%, to the point they were creating loan programs that could say, yeah, go ahead, take $500 each month and tack it on the back of the loan. No worries, your home's going to keep appreciating.
Ugh.
Boom! Next thing you know, we're crashing 10% each month.
We were in a
and you're
free
adding
fall.
$500 to your principal, and your adjustable rate's about to adjust in 2 years, and that is what we saw.
I could also recommend watching The Big Short. It's a great movie that really explains everything very well and hilarious.
Amazing
too.
one.
Yeah. Yeah, I remember
Amazing.
when that came out. Remember, Matt? I was reading that book on the plane one day.
Yeah.
I have another slide, just wanted to kind of slide into another slide. And I thought that this was really interesting to share, you know, which kind of piggybacks off of that previous slide. But these are and this is just our MLS, right? So things that happen outside of that could be builder sales, private sales, things like that. That's not going to be incorporated in this slide. But this is the number of sales by price range. So somebody tell me, which is just going to be you two, because you're the only two here right now. What is interesting about this chart? What is just like staring you in the face, guys?
Luxury homes.
Yeah.
Which we are seeing a lot of. Yes. And I know you are seeing those listings as well.
Unbelievable. Up over 106.3%, over 3 million. That's mind blowing.
That just says a lot. Once again, you look at, you still look at those numbers, I mean, they aren't like, they're going to be definitely smaller than when you look at, February contracts and, the previous, 16 to 33, but still that is huge numbers. And the other thing is when you start looking at, that price point per square foot, and like we were looking at before, it just says so much.
Truly.
And this is exactly what's carrying it. And once again, this isn't put up or buttressed by artificial mortgage approaches like we were just talking about. This is cash. This is people putting their money where their mouth is. This is someone that's ready to buy over a $3 million home and says, I have a confidence in the marketplace. I'm just going to pay cash for this. I'm not even going to leverage it. That right there says so much. And I think that's where a lot of buyers should be looking at and saying, all right, that there's confidence there. Maybe that'll give me a little bit more confidence in my marketplace when they're purchasing. Because I know there's a lot of buyers that are skeptical right now. They're in it and they're saying, well, why why are we seeing prices kind of continually dropping? You also see a lot in the lower price points, they need there's a lot of deferred maintenance. They do need work.
Right.
Yep.
So they're skeptical. Wait, I'm going to bite this bigger mortgage that's, high rate, and then I might have to put repairs into this. They're nervous, and rightfully so. But I think as you really start digging into a lot of the logical, non-emotional indicators that we're looking at, I think there's definitely confidence behind them.
Totally agree. And for those that might just be listening and you aren't seeing the visual, I forgot to mention that this is 2024 February compared to 2025 February. So sales, again, number of sales by price range. What do you guys think is the reason? I mean, I know, but the audience doesn't. So what do you guys think is the reason for the uptick in sales? Why do we have more sales than last year at this time?
I definitely think it's more so, I mean, obviously we talked about the inventory uptick, and then of course, a little bit more optimism about where rates are heading. So I think that's probably the big driver of what we're seeing here.
I think people are feeling more comfortable with rates, like Matt's been saying over the last
Yep.
couple of months. I think we're just seeing it now. They're just like, okay, it is what it is. If I don't jump now, I maybe never. So they're
Yeah,
not.
I mean,
I'm surprised
yeah.
that the under 300,000 had 266 purchases. I'm like, where are those homes?
Yeah.
Well, that's it. And you look at it, look at the difference in percentage, you know what I mean, in all those. And they're all very close. Really,
Yeah.
where you start to see the people stretching these numbers stretching their legs is going to be above 800,000.
Mm-hmm.
Okay. And that says it
Well,
all
5
right
to
there.
6 is pretty popular, but
Yeah,
outside of that,
yeah, that's true. Yeah, absolutely. I take that back. 5 to 6 is definitely going to be a good uptick, but you really see that, kind of that 6 to 8 drops to 11, almost 100% of that 23. And then from there, it just grows.
Oh, yeah.
23, 21, so, but then you really look at it and a lot of these people that are spending over 800,000, even over, $600,000, they're really looking at the economy. And that's something that everyone has to look at and say, like, what is your confidence? If I'm going to be buying that second residence that's over $1 million, or I'm planning on uprooting everything to move here and spend over $1 million, economy plays the biggest role in these decisions. And I think that says a lot. I think there's a lot of confidence in Arizona's economy in the future, where it's headed. We just had a big announcement at the beginning of the week. Kind of already knew it was happening, but Apple doubled down on it, and they are going to be giving, it's like up to $2 billion towards TSMC. Their main goal is to move all chip manufacturing from China over to the United States, and that's going to be spread between Texas and Arizona.
Yeah.
So you look at that, and then you look at Arizona right now being number 1 in industrial real estate in the country. Industrial, commercial real estate, industrial is all on these ancillary arms of TSMC in these microchip industry, and it's huge. And these industries have high paying jobs,
Right.
And they require a lot, professionals that have very unique skills, and these unique skills play well into our marketplace, because now what they're doing is ultimately kind of incubating that perfect setting for startups. And we already saw that in 2020 and 21. We were this hub that we were taking from California and these other places that they're saying, whoa, look at all this startup capital and all this stuff that's happening.
Right.
Well, it takes a very, very robust employment force. And that's what we're seeing. And I really think that this is just laying the foundation of that. And yeah, it's going to continue very nicely.
Are you seeing pretty solid employment as far as applications are concerned on your end, Ryan?
We are. We're seeing job transfers and people coming from out of state to Arizona. So yeah, we are seeing an uptick in that, obviously, from the past few months.
Yeah, interesting stuff, guys. I can't believe we've already been on for almost 25 minutes. That flew by.
We had a lot to cover.
We shared a lot of juicy bits. I promised that at the beginning of the show, and I delivered. So anything else that you think is important that we should share before we say goodbye?
No, I definitely think right now is a time for both buyers and sellers to really try to look at things logically and not so emotionally. It's very, very easy to get caught up in the emotions right now. We just have a brand new administration coming in. We're coming off a very tumultuous election cycle. A lot of things happening in the stock market, a lot of things happening in the real estate market, and not to mention globally. So when you're just being hit from all angles with news, it's very, very easy. Both sides, all sides are really going for that clickbait type fear-driven news. And it's very easy to kind of artificially make you emotional. And I don't think it's gonna really help. So I think at this time, if you're thinking of buying and selling and you find yourself being hesitant, and it's more of because an emotional feeling, something that you can't tangibly look at and show through the data, I challenge you to really look at that, because I think you're not only going to feel better in your life, but I think it's going to kind of pave the way to making the right decision in what you're going to do in real estate.
Exactly. Data. You know me. Everything's data driven over here. All right, guys. Well, I guess that about wraps it up. And we will see you next month. If you all want to check out any of our previous episodes, we've been doing this for years now. So I always say it'd be real fun to go back like 2 years and see what we said then and see, if it was true. I'm sure it was. So, Go ahead and check out our YouTube channel. We are at Team Evo AZ. That's our handle. Scroll down just a little bit and you will see the Arizona monthly housing market update playlist, which makes it real easy to check out our previous episodes. If you prefer the podcast style, maybe you bike a lot, walk a lot, run a lot, all the things, then then on your favorite podcast platform, do a quick search for Arizona Real Estate Radio. There you'll find us. Like, notify, subscribe, download, all the things. We really appreciate it. It helps us out a bunch. We like to get the real news out to the real people. All right, guys. Thank you so much. We'll see you next month.
Bye, everyone.
Bye, everyone.
Bye.